In this video, we're going to talk about the chart pattern of descending triangles. Stay tuned. Hey traders, a very warm welcome to you. So we're talking about this chart pattern called the descending triangle. Let me draw it on, let's talk about it, let's drill down into it, let's see if we can get some trade ideas from it, and most of all, let's find some ideas for making money from if we spot this pattern. Okay, so imagine this is price now, guys. Very simplified, of course, stripped out the noise. But the main features of the descending triangle are, this is flat, okay? The triangle is coming down to this point. We have the convergence to a point. So we have a downtrend at the top, lower lows, but we have a solid floor of support. So this is basically saying, whatever this may be, this is a decent support level. We might have tagged it multiple times before, whatever. The point is, it's a level where the price has not been able to push any lower. Now, these operate on a 1 minute chart, 5 minute chart, 15, whether you're day trading, scalping, swing trading, and in multiple assets. You can have this in individual stocks, indices, commodities, Forex, whatever. It's the kind of fundamental supply demand shift, which I'm going to go into in a second, as to why these work, and as to why they're worth looking out for, and maybe adding them, into another strategy or or bolting them into a existing setup is what I'm trying to say. Okay, so the attributes of this is what these lower lows here, lower highs here, and if you think about supply demand, how that shifts, you've got whatever it may be, you've got a good little bull run here, whether that's over a kind of an hour period or whether it's over like a multiple day period, depending on the time frame we're looking at. Comes to a high, whatever point here, the scales tip, don't they? The scales tip and sellers become more aggressive or buyers back off. One of the two happens to cause the kind of equilibrium to shift in the other direction. Then the sellers are in control here, they're more aggressive, they're happy to kind of hit bids. Buyers are backing off, they're getting cheaper and cheaper, and that's what you want as a buyer, unless of course you've got another manipulation. But generally speaking, most buyers want a cheap price as possible. So they're getting lower and lower and lower, they're less aggressive, they're paying lower and lower, until you get to a point where they go, okay, you know what? I'm prepared to, I just want to get the inventory now, I want to get the contracts, the stock, whatever the instrument may be. So I'm not going to go any lower. I'm just going to stand my ground here and get what I can. And sellers are hitting them, taking it all. All of a sudden, for whatever reason, the sellers stop and the buyers then go, well, I still want it, and step up. And that's where you get this drive up. Or more buyers step in and go in front of them. Then they go in front of them. They go in front of them. That obviously causes price to go higher. You get the idea. But the point is, and the pattern that is kind of unique to the descending triangle is this flat bottom on it, this floor which can't go under, the price hasn't been able to go under. Now the idea of trading this is that as price comes to this point, we're looking to trade a move to the downside. These are textbookly considered bearish, right? A textbook tells us this is bearish, and it kind of makes sense, doesn't it? Because even though we've got support here, sellers are prepared to pay a lower and lower price. And if you consider almost two sections to this pattern, you've got the lower section here, which is just really aggressive buyers who are passive but are strong. They're sitting at the same price and they're a big solid wall. They're not that aggressive, they're not causing us to go to new highs, but they're strong, there's still buyers there. And then you split that up into this top part here, then you say, hey, the sellers are reasonably strong, but they're aggressive because they're hitting it at a lower point. Aggression means they're prepared to take, a price hit for them, which is either I selling at a lower price, but they want to get the stock. They want to get the inventory, and that's the key to how price moves. Is that if someone's urgent about what they want, they will forgo the price they get for the urgency of getting filled. It's like you take a trade, you make a market order, you put a market order in. You want to get in right away. You put a limit order in, you're very passive, you're waiting for the price to come to you. Now, obviously the flip side is that you might not get filled on that, but you get filled at the right price. Market order is you don't care what price, it's the price now, but you just want the urgency of the fill. And that's kind of what's happening here. So we get to this point where we get to the pinnacle, and then all of a sudden we're going to break in one direction to the downside. So the theory being is, as we break, we're looking to sell short as we break through that support level. Now, trading isn't really black and white, guys, is it? We kind of get not always this scenario. So let's look at some scenarios that we could possibly get. Often we get a breakthrough here and comes back and retests and then goes again, and that might give us an opportunity to go short on the retest. Sometimes we might get a little fake to the upside that comes back and then breaks through. And again, that's a little bit more of a confirmation because we've got an area to put our stop, which is quite nice. It's kind of attempted to push into buyers. People have thought it's a failed pattern, then it comes in and kind of comes into fruition, the pattern, and we put a break to the downside. So either way, we're aligning ourselves with the short side on this, but it could be after a fake out. It could be kind of after the initial drive. Textbooks tell us to go straight away on the break, but it's not as easy as that. As you well know, guys, trading is not very as simple as that. Whilst you probably could take a few on that, I always like to look for something else to confirm that. Now, maybe that is a pullback or a flag at lows, or maybe that is that pullback again to that support turn to resistance, or maybe it's a fake out, just something else to give me that little bit of confirmation, because also for me, I like to find a way where I can quantify my risk. Now, finally, guys, where do we see this and where's the best place to see it? Obviously, if we see this in a downtrend scenario, so we've done this, then this is a nice continuation pattern. We've got a long-term trend, let's say over a multi-year or year kind of downtrend, pushing to lows, and we get this over a week period or something, a support level, but it keeps banging, lower lows. This is a good indication that this is probably going to at least test and have a go at some lows. And we're going to get a bit of a volume pickup here. Another thing as well, guys, is if we have this in an uptrend. Now, the textbooks tell us, let me do that so I don't get confused. The textbooks tell us that it's still a bearish formation. And I agree, because I understand, what it's all about. But if we've had like a multi-year uptrend, then we have this, I would be very quick to take profits on that, because I would be mindful that the overall trend is higher. And even though this kind of medium-term, short-term bearish pattern is developing, I wouldn't. Maybe I would take that, but I wouldn't be kind of looking for a home run on that, because I'd be careful that we may well kind of revisit a little bit before we roll over. It may be some more work to be done, some more digestion before that trend kind of ends, and you might end up it just sitting and chopping around again. I appreciate that's a complete mess there, but you get the idea. It might just sit there and chop around. So I'd be a little bit cautious on that. Anyway. That's the descending triangle, guys. Interesting pattern. If you like this video, give it a thumbs up, and don't forget to put your comments in the comments section below. And if you haven't subscribed, please do so for more videos from me and other traders on this channel. Take care. Good trading. See you soon. Bye-bye.